As of today, Monday, December 29, 2025, Republic Power Group Ltd, trading under the ticker RPGL on the NASDAQ, is currently sitting at 0.73 USD. This represents a staggering intraday move of plus 0.47 USD, which translates to a massive 177.63% gain in a single session. On the surface, if you were looking at your individual brokerage account this morning, you might have assumed you were witnessing a total trend reversal for a microcap that has been struggling since its IPO just a few months ago. Many investors using the Robinhood app or browsing through various investing sites would see this green bar and think the bottom is finally in. But here is the insight that most of the retail crowd is missing. This massive price action is happening right on the eve of an extraordinary general meeting scheduled for December 31. While the price is soaring today, the reality is that the company is seeking authority for a share consolidation, a reverse stock split. Usually, when a stock under $1 surges like this right before a vote on a reverse split, it is often driven by speculative volatility and low float dynamics rather than a fundamental shift in the business. The gap between what the ticker shows, a near triple-digit gain, and the reality of why management is asking for consolidation creates a very dangerous tension for anyone trying to invest online without looking at the SEC filings. Common wisdom suggests that when a stock jumps nearly 180% in a few hours, there must be a major contract win or a buyout rumor. You might see people on a Fidelity trading platform or searching for investment help on social media claiming that Republic Power has finally cracked the code on their ERP software scaling. However, the deeper reality is much more nuanced and frankly a bit more technical. We have to look at the NASDAQ non-compliance notice the company received back in November. They failed to file their annual report on Form 20F in a timely manner. When a company is late on their homework and its stock price is hovering near the 52-week low of 0.23 USD, the market narrative is usually one of extreme caution. Today's price action feels like a pressure cooker venting steam. If you are someone who does self-investing and manages your own individual brokerage, you know that these massive vertical moves can be traps just as often as they are opportunities. The volatility we are seeing in RPGL today reminds me of the wild swings we often see in much larger names like Tesla stock or Nvidia stock, but without the underlying institutional support that those giants enjoy. While everyone is focused on Apple stock making small percentage moves on high volume, small cap names like Republic Power can move like this because their market capitalization is tiny, sitting around $12 million even with today's move. If you're using SoFi Invest or checking your Fidelity Wealth Management dashboard, the sheer percentage gain here looks like an anomaly. Institutional activity in these microcaps is often minimal, meaning the price is being pushed around by a relatively small number of shares. This is the definition of high-risk online investing. It is the type of scenario where expectation that a bottom has been found clashes violently with the reality that the company is still working to regain compliance with NASDAQ listing rules. The move today has been characterized by significant volume, far exceeding the daily average. This suggests that some traders are betting on a successful outcome for the upcoming extraordinary general meeting. At that meeting, the board is looking for approval to consolidate shares, which is a classic move to boost the share price back above the 1.00 USD requirement to maintain a NASDAQ listing. If you are using a Fidelity mobile app or tracking your portfolio through Interactive Brokers trading tools, you've likely seen this play out before. A reverse split is often a double-edged sword. It solves the immediate threat of delisting, but can sometimes lead to further selling pressure as short sellers see a higher price target to borrow against. This is why the fluidity of the market right now is so deceptive. The expectation of a save by the board is driving the price up, but the reality of a consolidated share count often leaves retail investors with fewer shares that could still face downward pressure if the underlying financials don't improve. Let's look at the actual business for a moment to see if the fundamentals support this 177% rally. Republic Power Group is a Singapore-based company that provides customized enterprise resource planning, or ERP software. They specifically target airports, cruise terminals, and government agencies. Now, the expectation from their IPO at $4 per share was that they would leverage their AI-enhanced modules to quickly scale into the SaaS market. The reality, as shown in their recent filings, is a business that is heavily concentrated. In fiscal year 2025, just 4 clients accounted for over 70% of their revenue. This creates a massive risk profile. If just one of those clients decides to move their business to a larger competitor, the revenue floor drops out. For someone using Interactive Brokers' fees as a reason to trade frequently, these types of fundamental risks are often secondary to the chart, but for long-term investors, this concentration is a red flag. The company is currently in a transition period. They're moving from a project-based revenue model to a subscription-based SaaS model. They expect to officially launch these products in the first fiscal quarter of 2026. This is the hope phase of the investment. The market is pricing in the expectation of recurring revenue, which is much more valuable than one-off consulting contracts. But again, look at the reality. Their revenue has been a roller coaster. It went from over 5 million SGD in 2023 down to less than 700,000 in 2024 before recovering to about 3 million in 2025. Those are not the kind of stable growth numbers you see in Fidelity mutual funds or the steady climb of something like Nvidia stock. This is a company fighting for its life in a competitive software sector while dealing with internal control weaknesses that they are still trying to remediate. If you are using Robinhood stock trading to play these swings, you have to be incredibly disciplined. The intraday movement today to 0.73 USD is a clear example of the market's expectation of a turnaround. However, the lack of business insurance and the heavy reliance on a few key vendors and personnel means that the operational reality is quite fragile. One major cybersecurity event or a loss of a key engineer could be devastating. This is why many professional advisors at Fidelity Wealth Management might steer conservative clients toward Fidelity ETFs or a Schwab Intelligent Portfolios setup rather than individual microcap software stocks. The risk-reward ratio here is off the charts. I want to hear from you on this one. Comment below how many shares of RPGL you currently hold, or if you are just watching from the sidelines. Are you betting on the SaaS pivot, or do you think the reverse split will be a sell the news event? As we look toward the future, the catalysts for Republic Power Group are very clear. The first is the December 31 meeting. If the share consolidation is approved and successfully executed, it removes the immediate threat of being booted to the over-the-counter markets. That would be a win for those who invest online and want to keep their assets on a major exchange. The second catalyst is the filing of that late 20F report. Transparency is the currency of trust in the stock market. Until those audited figures are live and the material weaknesses in their internal controls are addressed, the stock will likely remain a playground for speculative day traders rather than a staple for long-term Fidelity IRAs or SoFi active investing accounts. The macro environment isn't making things easier for small-cap tech. While the broader market might be cheering for rate cuts, companies that are not yet consistently profitable are the most sensitive to any shifts in liquidity. If you are managing a SoFi robo-advisor account or a similar automated intelligent portfolio, these are the types of stocks that are usually filtered out due to their high volatility and low liquidity. But for the individual brokerage trader using Interactive Brokers' platform features to hunt for alpha, the 177% gain today is exactly the kind of move that draws people into the world of online investing. The tension between the incredible price movement and the sober reality of the company's financial standing is what makes this such a compelling, if dangerous, story. To summarize where we are, Republic Power Group is having a moment of extreme euphoria today with a price of 0.73 USD. This surge is likely a combination of anticipation for the upcoming shareholder meeting and a technical rebound from oversold conditions near its all-time lows. However, the reality remains that this is a company with a market cap under $15 million, significant customer concentration, and a pending share consolidation that could fundamentally change the share structure. The expectation is a glorious comeback. The reality is an uphill battle against listing requirements and operational hurdles. Whether you are using Robinhood fractional shares to test the waters or you're deep in the Interactive Brokers stock trading ecosystem, this is a ticker that demands your full attention because it represents the purest form of market psychology, the fight between hope and the balance sheet. When you compare this to the stability of something like Apple stock or the structured growth of Fidelity Investments, it serves as a reminder of why many people prefer the safety of Fidelity ETFs or a Schwab Intelligent Portfolios approach. But for those of us who live for the analysis of these specific company stories, RPGL is a case study in why the current price is only one small part of the narrative. The real